Oh, it's tax time, which means some of us have a little extra cash in our pockets right now. So what are some smart things you can do with a tax return? Let's ask our finance guru, David Sharpe from Globe Financial Planning. Let's get straight to it, Sharpie. What are some smart ways to use a tax return?
Yeah, look, Monica, it's going to depend a little bit on each person's, individual circumstance. Maybe if cash flow's been tight and you've accrued some high interest debt, maybe like a credit card, well, that should be your first port of call, because we know, interest rates could be as high as 20%. It's about as good a risk-free return as you can get. For those who may be looking to save, don't have that sort of debt obligation, maybe you're earning less than $50,000, the government has this co-contribution scheme. You can put $1,000 after tax into super and the government will top that up 50%, so a bonus $500. Great way to maximise your tax return. If you've got a higher income, you can put that money in pre-tax, and what that has is a double benefit of saving for the future, but also creating additional tax returns for next year that you can save as well. And lastly, perhaps the best way to put the money is investing in yourself. So if there's a training course or a program that you can do that can help you get your ideal job or a promotion, double benefit there. One, I'd better job satisfaction, but often a pay rise as well.
All right, so we'll run through those. Pay off debt, add to your superannuation, put it to pre-tax, or maybe invest in education. What shouldn't we do?
All right, so here's the big one. First thing to remember is when you get a tax return, this is not some gift or, a benevolence from the government to give it back to you. As a general rule, it's a result of you paying too much tax along the way, or maybe you've already had some expenses which has allowed you to have some deductions. So don't just treat this as some sort of windfall gain, because if you get $1,000 back for the average income earner, that's about your after-tax income that you might receive for a full week. So if you're just going to fritter away $1,000, you're basically frittering away a week's worth of hard work, and most people don't want to do that.
No way. Is there an argument we should also be treating ourselves a little, because we are, after all, in a pandemic? It makes us feel good.
Look, you're right, and this is the part where I get to be the boring, grinchy financial planner. Look, we can't always be sensible and adult our entire life, and I completely understand that. But if you're going to just rely on a tax return to treat yourself, what happens if next year there is no tax return and you're not going to treat yourself then at all? You should be building that into your day-to-day budget on an ongoing basis and not just relying on sort of these forced savings, which is what a tax return is. And if all you do is end up spending it, then it's not savings at all.
Unfortunately, you make sense. Finally, what are your tips this Tuesday, Sharpie?
Well, I touched on a couple of these before, but pay off expensive debt first, and by that I mean highest interest rate down to lowest interest rate. Always your best investment all the time is going to be in yourself, always that self-improvement. And lastly, if you're worried about the temptation of the money hitting your bank account and maybe you're going to go spend it, log into MyGov and change the account that the payment goes into, have it directly straight to your mortgage or another debt account. It's out of sight, out of mind, and you get great bang for buck for it.
David Sharpe from Globe Financial Planning, been good to speak with you again.
Thanks, Monica.